What was the income tax rate in the 1950s? Have you ever wondered how much people were paying in taxes back in the 1950s? The income tax landscape during this decade was quite different from what we see today. Let's break it down. In the 1950s, the United States had a remarkably high top marginal income tax rate of 91%. This rate applied to individuals earning over $200,000 and married couples making over $400,000. When adjusted for inflation, that is roughly equivalent to $2 million and for $0.66 million today. However, only a tiny fraction of taxpayers, fewer than 10,000 households, actually faced this top rate. So what did this mean for the average American? The effective income tax rate, which is the actual percentage paid after deductions and tax strategies, was much lower. For the wealthiest 1%, the average effective rate was around 16.9%. When you include all taxes, such as payroll and property taxes, that number rose to about 42%. Interestingly, the top 0.1% of households had an average effective income tax rate of about 21%. This shows that, while the marginal rates were high, many wealthy individuals found ways to minimize their actual tax burden. For the broader population, tax rates were progressive. In 1950, rates started around 17.4% for incomes up to $4,000. As income increased, so did the tax rate. For a married couple earning $24,000, which is about $280,000 today, the marginal tax rate was roughly 43%. Social Security taxes were also much lower during this decade. The combined tax rate for employers and employees was about 4%, compared to 12.4% today. This tax applied only up to a low-income cap, which was $2,400 in 1954, equivalent to about $28,000 now. Reflecting on the 1950s, this tax structure was part of an era marked by strong economic growth and a thriving middle class. The high marginal rates on the wealthy were seen as a way to support government services while promoting a fairer distribution of wealth. So, while the headline top marginal tax rate of 91% might sound shocking, the effective rates for most Americans were considerably lower. The tax system was designed to support the economy and the American dream during a time of prosperity.